where you're joining us from. This is part of the 26th session of the Economic Research Forum being held virtually because of the COVID-19 pandemic. As a result of the pandemic as well, unfortunately, we are only able to have one of the presenters in person because the other participant is in Korea, where the time difference would make it midnight. Therefore, he was not able to join us. The third participant has excused herself because of certain personal commitments and because the subject of her presentation uh, was very similar to Amir's presentation. It will be there for people to have access to later on, but it will not be presented here. I will try to present the presentation by Dr. Moamen Gouda, who teaches in Korea, in South Korea, who has a PhD from Germany and who worked extensively on issues of laws and institutions and the way they impact economic institutions. And his presentation is
Dr. Pornik, I'm sorry to interrupt, but the sound is not very clear. So if you can, it was clear at the beginning. So if you can just kindly come a bit forward, and Amir, if you can please mute your mic so we have a good quality voice. Thank you.
Okay, thank you very much. So we start again. Good morning, good afternoon, and good evening, depending on where you're joining us from today. I see that we have 20 participants, which is quite encouraging. I very much look forward to having a lively discussion. This is part of the 26th annual conference of the Economic Research Forum, which we are being forced to hold virtually because of the COVID-19 pandemic. It's also unfortunate that because of the difference in timing, Dr. Moamen Gouda from Korea is not able to be with us in person. So I will be making the presenting his presentation on his behalf after Amir has made his presentation. This session was supposed to have 3 papers. 2 of the papers will be presented today. The third one was a bit covered a similar subject to a certain extent to what Amir covers, and it will be available for people to view. But unfortunately, the author of the paper was not able to be with us because of urgent personal commitments otherwise. Now, the 2 papers that will be presented, one is by Dr. Moamen Gouda, who teaches in South Korea. He has obtained his PhD from Germany and has worked extensively on issues to do with laws and institutions and the way they interact with economic systems and procedures. And his presentation is about it offers a novel discussion of the relationship between Islam and democracy that is a bit at variance with the general notion of the impact of the resource curse in Muslim countries. Then there is the presentation by Amir, who has obtained his PhD from the University of Cambridge and teaches at the London School of Economics. He has worked on the particular issue of choices for use of oil rents and the differences between countries that have extensive resources and countries that are less well endowed. So we will start with Amir's presentation first, And then I'll try to make a presentation for Dr. Gouda. And and while the session is going on, you can use the comments button to provide your comments. And at the end of the session, we'll get the questions and answers. And once we've exhausted all the questions, if there's any time left over, you can raise your hand and ask a question in person. With that, over to you, Dr. Amir Lebdioui from London School of Economics, please.
Hi, hello everybody. Can you hear me fine? Great, fantastic.
I can hear you.
Great, so I am very pleased to be part of this panel. Yeah, unfortunately, one person couldn't make it, but hopefully we can get a good discussion anyways. So this topic, so you are somehow a tough audience to talk about export diversification, because most people who have an interest in the MENA region or who study the region are very well aware, right, of the context of commodity-dependent need for diversification. So my challenge today is to tell you something that is not necessarily obvious, right? So the first objective of this presentation and the paper is to show the importance and the influence of per capita wealth, right? Per capita oil rents in determining the suitability of different diversification pathways and the suitability of different ways to manage resource revenues. The second objective will be to try to rethink what an optimal resource rent management strategy looks like in order to promote economic diversification in the MENA region. So let me start, before I actually go into the topic of the presentation, let me start by bringing up this quote that most of us would know, right? Give a man a fish and you feed him for a day, teach a man a fish and you feed him for a lifetime. It seems that this quote can actually be attributed to a MENA scholar, an Andalusian scholar from the 12th century. And this is actually very reflective of how oil rents have been managed, especially in the MENA region, especially in the past 20 years from the last commodity boom. Because in a way, oil rents have been used to fuel current consumption at the expense of production and as a result of future production. So we could perhaps take it and adapt it to today by saying, distribute rents to fuel consumption or absorb employment in the public sector, and you will maintain welfare for years, but invest in productivity enhancing capabilities, and you can sustain welfare beyond the commodity boom. So to start off, we can identify several groups of countries in the region, right? This is in terms of extractive rents per capita and extractive dependence, right? The share of extractives in total exports. So we can distinguish the resource poor but not extractive dependent countries, just Tunisia, Turkey, Morocco, the resource rich but not extractive dependent countries, right, that have achieved some relative degrees of diversification, like the UAE, and the resource rich and extractive dependent countries. Now, this presentation is going to focus on this last category of country, right? Because we have often grouped these countries together, right? Assuming that they're all resource rich, which is actually misleading, right? And the variations between these countries matter a lot in terms of the political economy of resource rent management. So this graph is using a logarithmic scale, but if we use the same graph with a linear scale, right? What we really see is that, in fact, the level of resource rents per capita of countries such as, Algeria or Iraq or Bahrain is actually much closer to the level of extractive rents of resource poor countries such as Turkey, Tunisia, Morocco, than it is from countries like Qatar, Kuwait, or even Saudi Arabia to some extent. And this distinction is very important, especially in terms of adjusting the social expectations from resource wealth. So the zone in red is where you really do not want to be, right? So this is the zone where countries are the most vulnerable to commodity price fluctuations. And over time, so the question is whether are countries moving out of this zone, or are they actually going to it? So since 2010, what we can see is that there has been some relative degrees of diversification across the region, mostly due to the drop in oil prices, but countries don't seem to diversify fast enough, right? So you have countries like Bahrain and Oman who are, diversifying. Saudi Arabia is also diversifying, but not fast enough. The countries that are the deepest into the red zone, like Algeria or Iraq, have actually not diversified at all, right? Despite the collapse in commodity prices in 2014. And what this is, even countries like Qatar or Kuwait are not moving in the right direction, right? Over time, they might even end up in that red zone, especially if we think about, the concerns of resource exhaustibility or the phasing out of fossil fuels as we transition into a low carbon future. The only difference is that they might have a bit more time, right, than countries like Algeria or Iraq. So many questions arise from this, but one of them is, how have these countries managed their resource revenues, right, from the last boom, and how should they use their resource revenues to stimulate diversification? The debates on how to manage resource revenues, so the academic literature has been divided, right, across several issues, such as whether resource revenue should be invested domestically or abroad, should they be consumed or invested in financial assets or real assets, through sovereign wealth fund or through the general budget. And to answer this, let's first start by mapping out the different choices, right? The different options for managing resource revenues. First, policymakers have to decide whether resource rents are to be invested or consumed. If they are to be consumed, that can be through the public sector, right? So, for example, through recurrent government expenditures or through increasing public sector wages, or through the private sector, and that can be private spending, and that can be done through targeted transfers, so consumption subsidies for particular goods, or through untargeted transfers, right? So, for example, citizen dividend schemes, or even lower taxes, as in the Gulf states. But even that, we don't know how long that is going to last, since Saudi Arabia recently announced that they will triple the VAT. If resource rents are to be invested, that can be done in financial assets, particularly abroad, right? In either safe assets or in high yielding assets, or resource rents can be invested in real assets, domestically or abroad, through the public sector or through the private sector, right? So through the public sector, through investments in general capabilities, right? Infrastructure, human capital, which can be sector neutral or sector specific. And that can also be done through the private sector, for example, through bank lending or subsidized credit, which can also be sector neutral or sector specific. The conventional policy advice, right, based on the permanent income hypothesis or the bird in hand rule, has often been that resource-rich countries should invest their resource revenues in financial assets overseas, right? And that is mostly because of the risks associated with other types of resource revenue investments. The idea that, if you invest domestically, this might lead to fiscal instability. Policymakers may misjudge the duration of a commodity boom. They might overspend or waste those investments by investing beyond the absorptive capacity of the economy. Investments for consumption can be hijacked, right, or can be captured by elites, or be used for populist motives. The problem is the standard policy advice is actually unlikely to stimulate productive transformation, and may also push the benefits too far into the future. At the same time, in order to achieve export diversification, what you actually need is investments in to enhance the productivity of capabilities in non-tradable, in non-oil or non-resource tradable sectors. And to achieve that goal, investments in real assets domestically are needed. So this dichotomous view, right, of fiscal stabilization, right, by investing overseas, and export diversification as mutually exclusive is actually not so helpful, because we need to add the time consideration. And actually, on the long term, export diversification is the best fiscal stabilization. So countries like Malaysia really reflect that idea. Malaysia has actually not followed the standard policy advice. No country has diversified their export basket by only investing their resource revenues in overseas financial assets. And a country like Malaysia was actually running a much higher public deficit as share of GDP from the 70s to the 2000s, even higher than countries like in Venezuela. But the difference is that their public investments had transformative impact on the long run and enabled to actually diversify the productive structure of the economy and diversify the sources of foreign exchange. So focusing on short-term fiscal stabilization might not actually be helpful on the long term. So the question is, how have MENA countries managed their resource revenues so far? To put it simply, well, mostly to fuel consumption and financialization at the expense of structural transformation. So I'm going to be generalizing here, but almost across the board, resource revenues have been used to support citizens from cradle to grave by providing free education and healthcare, highly subsidized utility prices, low taxes, as well as employment in the public sector for nationals. So MENA countries actually tend to have much larger energy subsidies, lower taxes, and higher military spending than the rest of the world. In addition, for some of these countries, particularly the UAE, Kuwait, and Qatar, we can note a high level of accumulation in financial assets overseas. So what are the implications of this type of resource rent management? It can't be denied that there has been some improvements in socioeconomic indicators, such as the Human Development Index. Actually, it's only for Libya and Yemen in recent years, which are both facing conflict situations. So only for these two countries, the HDI value has actually decreased. But for all other countries, it has increased since the 2000s. There's also been improvements in the business climate, in the quality of infrastructure, the quality of bureaucracy, as noted by the Quality of Bureaucracy Index. But as Sharif and Hazanov show, the standard policy advice, right, to improve the business climate has not sufficed to stimulate export diversification. So I know that the other panelists that couldn't make it focuses on the role of good governance, right, to explain diversification outcomes in countries. But whether good governance is needed, but whether it actually will suffice to stimulate diversification is a different question. And it seems that it's just not enough. But does it matter, right? Can you achieve, if you can achieve social welfare or growth without increasing the productivity of non-tradable sectors? And the answer to that question actually depends on, sheds light on the role of per capita wealth. So what can be noticed is that the countries, so we can distinguish very resource-rich countries, right? What I call VRR countries, such as Qatar, Saudi Arabia, UAE, Oman, Kuwait. So these are typically countries that have extractive rents per capita above $3,000. From medium resource-rich countries, so Algeria, Bahrain, Iran, Libya, or Iraq, for where extractive rents per capita are between, so above the world average, which is about $125, and below $3,000. And we can observe very different patterns, right? So in terms of employment, for example, very resource-rich per capita countries can afford low unemployment regardless of their diversification rate. And a similar pattern can be observed for growth. In contrast, for medium resource-rich countries, there is a clear correlation, right, between the diversification rate and growth and employment. This can also be, you can look through the paper online to look into more of that data, but basically you can see that for the first category of country and the second category, even though the diversification rate is similar, they're actually divergent in employment and growth rates. This hypothesis was also tested in a previous study of mine, looking at basically not just the MENA region, but all across the world, and the same patterns can be observed. So how can you explain the influence of per capita wealth? So actually, Kamet and her associates had looked at this in the context of governance. And what they find is that regimes with very high oil earnings per capita tend to have better political governance records, because then countries with medium levels of oil earnings per capita, because the former tends to prefer distributing rents to buy consent, right, and buy social peace. They can afford to, which is, but for medium resource-rich countries, despite their large resource endowment, because of the large population size, resource rents don't suffice to buy, the population support. So this relates to a logic of limited order arrangement, right? When resources are plentiful, coalitions can afford to be broader and perhaps more stable. And then this notion can be, also has relevance in the context of diversification strategies for two main reasons. First, the notion of employment creation, which is of central importance in the MENA region, and particularly the ability of the state to absorb labor through public sector employment. And very resource-rich countries per capita can actually afford to keep unemployment low by, creating, some say artificial, but creating employment in the public sector, right? To keep people, as a way to redistribute rent. And in that graph, you can see that countries such as Qatar, Kuwait, and Saudi Arabia, their share of public sector employment for nationals is beyond 65%. But for countries like Iraq or Algeria, this is just fiscally impossible, right? Especially given the size of the population. And for these countries, the only way to generate employment is by diversifying the economy, right? To boost demand for labor in different sectors of the economy, particularly given the low labor intensity of extractive sectors. The second difference is in terms of the opportunity cost of investments in financial assets overseas. So countries such as Qatar or Kuwait, they can afford to invest their rents in financial assets overseas, and they can live off, the returns they get from those investments. So the 3 or 4% they get from their investments in the London or New York stock market. And that will be enough for rents distribution or to invest in growth enhancing capabilities. So this is sort of the living like a rentier or living like a pensioner. So this is similar to what Norway has done with its oil revenues. But for countries such as Algeria or Iraq, again, investing their resource revenues overseas, they won't receive, so the returns from those investments won't suffice, right, for rents distribution to either buy social peace or to invest in growth enhancing capabilities, which means that they have a high opportunity costs, right, of investing assets overseas. So we need to go beyond the one-size-fits-all approach, right? We need to go beyond the Norwegian example, which has been praised very often because it might not be suitable to the conditions of most countries in the MENA region. And there are several factors, right, that influence the trade-offs between different types of resource revenue investments. So I just mentioned the degree of resource abundance per capita, But it's not the only factor, right? The current degree of commodity dependence matters, but also the degree of resource exhaustibility and anticipated price fluctuations. So whether you're dependent on oil or copper makes a big difference because, you know, especially in the context of changes in consumer demand and in the context of, you know, low carbon future. What that means is that despite differences in the degree of resource abundance per capita, even very resource-rich countries such as Saudi Arabia, Qatar, Kuwait also need to diversify, right? So across the board, resource revenue management in the MENA region needs to be reoriented towards the accumulation of productive capabilities. And to end, so in a forthcoming paper with Hajun Cheng, we are proposing a novel approach in order to overcome domestic structural constraints to diversification, such as low technological sophistication, limited areas of competitive advantage, while mitigating the economic risks that are often associated with the domestic investments of resource revenues, such as public investment in efficiency, absorptive capacity constraints, and Dutch disease. This approach is based on two main features. First is the gradual scaling up of domestic assets, of domestic investments in real assets. So at the beginning of a commodity boom, instead of investing everything domestically or everything abroad, the idea is that every year, so most of it will be invested for short-term fiscal stabilization, right? But every year, the domestic allowance, right, for investment would increase. And this approach is dynamic because over time, right, in a short term, it will enable fiscal stabilization, but not at the expense of investments for long-term transformation. And the advantage is that it reduces the cost of misjudging the duration of a commodity boom. If a commodity boom ends up being short, then most of the money would have been saved in financial assets. If it ends up being longer, then most of it will be channeled towards productive transformation. The second feature is that it's oriented towards tradable sectors. So Sherif and Hazanoff, I cite them a lot because I really like their work, showed that the way to expand the absorptive capacity of an economy is by investing in enhancing the productivity of non-oil tradable sectors. So the approach is also takes into account institutional capacity, right, over time, because, well, you know, people like Paul Collier talk about the capacity to invest, right? So invest only when you have the capacity to invest. But the question is, how will you get the capacity to invest if you don't invest in the first place, right? So there is an element of learning by doing or investment experience. And this approach also enables for the economy to gradually adjust, right, to absorb a larger quantity of domestic investments. So in order to conclude, well, almost all resource-rich countries in MENA need to diversify their economy, although the degree of the urgency may vary. To date, almost across the board, revenues have been used to fuel consumption and financial diversification at the expense of structural transformation, and this needs to change. The standard policy advice is not suitable to the region. Mainstream models are dominated by a short-term emphasis on consumption and fiscal stabilization at the expense of production and long-term structural change. So a different approach is needed, right? This approach is not without risks. Like any form of industrial policy or government interventions, there are risks of government failure, but it needs to be weighted against the alternative, right? And in that context, maintaining the status quo is actually far riskier, especially in the context of a low carbon future. So thank you for your attention. You can find the paper on the ERF website. It is still in a rather rough draft, so your comments will be very welcome.
Thank you very much, Amir. You also indulged, but it was well worth it. Thank you very much. And I think I understand that you might be able to play the video of Moamen Gouda's presentation, so we'll try that first. If it doesn't work, you will have to put up with my presentation of it. So can we try to put the video of Moamen's presentation, and then I will go to my comments and open the floor for discussions.
Yes, most certainly.
being able to be with you live during the session. There is a 7 hours difference between Seoul and Cairo. So you can imagine it will be maybe around midnight here in Seoul when it takes place, when the session takes place in Cairo. So I'm sorry for this. I'm especially sorry for Dr. Mohammed Bournik, because I understand that he will be my discussant, or our discussant actually. So I deeply apologize for him, but I will definitely check out the video that will be provided later after the session ends. And I will definitely consider, of course, his fruitful comments. And of course, all of the attendees' comments would be considered. And I really appreciate your help with this. Also, I would like to thank ERF for allowing us the opportunity to present our paper in this, excellent annual meeting. So without further ado, the idea here is that we'll be talking about oil curse, Islamic constitutions, and democracy. The idea would be, I think, would be very simple, but there will be some sort of a twist, which we will explore together. This paper is written or co-authored by Shimaa Hanafy, which is my co-author and also my wife. So it's an interesting collaboration, our first collaboration. Hopefully it's a fruitful one, but let's start and let's see what's happening. So there are hundreds of studies that provide evidence that one type of resource wealth, mainly oil, tend to produce a political resource curse. Of course, this body of literature mainly, I would say mainly focus on Ross, 2008, 2012, Ulfelder, 2007, Peppa Norris, and there are many other scholars that have written about the political resource curse, especially with the relation of oil. So according to Ross in 2015, more oil dependency means more several things. First of all, durable authoritarian rulers and regime, more government corruption, more civil conflicts, and more gender inequality. Winchocken in 2002, he finds out that a 1% increase in resource dependence as measured by the ratio of primary exports to GDP leads to nearly an 8% increase in the probability of authoritarianism. Aslaksen in 2010, he argues that this explains, or the resource curse explains the lack of democracy in Muslim majority countries. Now, regards the relationship with oil, Islam and democracy, there is another body of literature that tackles the relationship between Islam and democracy. So there are numerous studies that have tried to establish a link. Mainly, I would say most prominent paper is by Fish in 2002, by also Nicholas Potravka, he's my former co-author in 2012 and 2013. So the main argument here is that Islam and not oil per se is behind the democracy deficit in Muslim majority countries. Many theorize that Islam is inherently incompatible with democracy. Of course, we know the works of Huntington and Lewis and Fukuyama, most famous authors. And I would like to quote here Keduri in 1994. He's saying that the ideas of representation, of elections, of popular suffrage, of political institutions being regulated by laws laid down by our parliamentary assembly, of these laws being guarded and upheld by an independent judiciary, the ideas of the secularity of state, all these are profoundly alien to the Muslim political tradition. So again, another piece of evidence or another piece of the puzzle that relates Islam to the authoritarianism and not oil per se. Using more rigorous methodology, a considerable body of empirical studies finds that even when other variables are controlled for, a statistically significant negative relationship between Islam and democracy still holds. And we have the works of Barrow, Rowley and Smith, and Hanush in 2013. So what can we add to this? So there are two points of view here, or two bodies of literature, and we're trying to combine them together. The problem of the works on Islam is that we think that Islam is wrongly measured. So actually, most of the relevant empirical studies suffer from a fundamental flaw. Proportion of Muslim population in a given society is often used as an appropriate measure for Islam, ignoring the fact that religiosity among Muslim population significantly varies in time and place. So the idea here is pretty simple. I mean, if you are measuring Islam by the amount of Muslims, then you are actually, I think you're making a huge mistake. You're putting me, Dr. Muhammad, I mean other Muslims in the same basket as Bin Laden, for instance, or as al-Baghdadi of Islamic State. So, and I think this is inherently incorrect, of course, because we have different religiosity, we have different points of view, we have different ideas regarding religiosity. Maybe somebody is not a believer. Some other Muslim is a really religious Muslim. Some other Muslim is like halfway in between, and so on. So the idea in the empirical research that they are measuring Islam by Muslim population, I think this is really unacceptable. And to give you an example here, Nigerian Muslims comprising around 50% of population are significantly more observant to Islam than, for instance, Turkish Muslims, representing around 98% of population. So this is something that you should consider. For instance, if you consider Islam by the amount of population of Muslims, then Turkish Muslims would be around 98%, which we think would be more Islamic than Nigerian Muslims. But the thing is, Nigerian Muslims, although they are only 50%, they are much more religious. From many surveys, it shows that they are much more religious than Turkish Muslims. So this is one problem also. Another thing also, as we have discussed, we need to consider if this is Sunni or Shiite Islam, which school of jurisprudence, what is the level of religiosity, what is the major ideas of fiqh or whatever that the population is following. So interestingly, many PEW and Gallup surveys show significant support for democratic values among Muslim population. So if you are measuring Islam by Muslim population, we have surveys, actual surveys from 1995 until 2001, for instance, for the survey. It shows that Muslims and members of from other religions give about the same support for democratic ideals and leadership. So the bottom line is that empirical studies so far have focused mainly on Muslims and not on Islam per se. And this is a completely different story. If you are saying Islam is different from Muslims. Because again, Muslims can differ in the way they uphold Islam. So you cannot say Islam and oil or Islam and democracy. You need to be very careful about what you're trying to see here. So far, as we said, they are measuring Islam by Muslim population and not by something else. So from an institutional perspective, we will follow an institutional perspective this paper, just to give you an idea about what is the meaning of institutions. So institutions are the rules of the game in a society. They structure incentives in human exchange, whether political, social, and economic. We have two kinds of institutions here. We have formal institutions, and these are like written constitutions, laws, policies, regulations enforced by official authorities. And we have informal institutions, which are often unwritten, like social norms, values, habits, customs, traditions that shape thought and behavior. Religious beliefs is usually considered an informal institution, because usually it comes by social norms, it comes by habits, it comes by tradition. But the thing is, if you consider religious provisions in constitutions, they are considered formal institutions. So actually, religion can morph into formal and informal institutions. In this paper, we're trying to measure Islam from a formal constitutional perspective. We're measuring actually Islam from religious provisions in constitutions. So as religion is coded and administered under constitutional authority, it becomes a formal institution. And this was the basis for a previous work of mine, published in 2013, and also a recent work co-authored by Goodman, where we try to see how Islamic constitutions affect minority discrimination in Muslim majority countries. So in this study, we examined the effect of formal institutions, mainly constitutional provisions on democracy in societies with a significant share of Muslims. So our hypothesis is that regardless of oil wealth, countries in which Islam is entrenched in the constitution tends to have weaker democratic institutions than otherwise comparable countries. And I will tell you in the next slide why we hypothesize, our main theory here. So we have actually two hypotheses. Our first hypothesis is that prescribing Islamic law or Sharia law as a source of legislation in the constitution, this negatively affects democracy in a given society. Also, granting Islamic law a higher level of supremacy in the constitution negatively affects democracy in a given society. And let me explain here what's the meaning of supremacy. If I say Islam is a source of all legislation, okay, so this is we are codifying this through a binary code, 0, 1, okay. So if Islam is a source of constitution of legislation, then this is 1. If it's not, then it's a 0. But the level of supremacy differs. For instance, if I say, like, for instance, the Egyptian constitution, it says the principles of Islam are a major source of legislation. Okay, here we have the word principle. Okay, here we don't have Islam directly, it's indirectly. Principles of Islam, we can argue what are the principles of Islam. So the principles of Islam are a major source, one of the sources. It's a major, but it's one of the sources. So here we have less supremacy than, for instance, the Constitution of Yemen, which says that Islamic Sharia is the source of legislation. This is completely different. We have a higher degree of supremacy in the Yemeni constitution than the Egyptian constitution, because it says directly and explicitly, Islamic Sharia is the source. It's the only source of legislation. So in that case, we codify this in a higher ordinal scale. So while various Islamic provisions exist in constitutions, we believe that the source and supremacy provisions are the most important, since they give Islam a superior role in shaping legislation in a given state. And actually, working on constitutions and codifying constitutions, by the way, this comes from a data set that I created along with a very nice co-author, Dawood Ahmed. We work on this index. It's called Islamic Constitutions Index, and we published this paper, I think, in 2015. So we can find this constitution on 30 benchmarks, okay? But those are the two most important, I think, provisions, because you can have a constitution that's, I would say, totally secular, okay? But if you insert one provision like this, for instance, it says that Islam is the source of all legislation, then that's it. Then any laws that are coming afterwards, established from this constitution, will have an Islamic, I would say, flavor to it, because it's explicitly say so, okay? So this is why we usually focus on those two specific provisions in our index. So the contribution here is that we think that we are treating Islam as a formal institution, and this is a new approach to Islam. So as we said, so far, the work on Islam and democracy tends to prioritize informal institutions like Muslim population. Also, we have to remember that formal and informal rules and norms could be complementary, competing, or overlapping. And we include measures for Muslim population as well in our work. Also, we try to provide evidence that constitutions matter. So many studies theorize that constitutions matter in shaping prevailing institutions. And our study is the first to empirically use two Islamic constitutional provisions, ISL. ISL stands for Islam as a source of legislation, and SI, supremacy of Islam, as the main independent variables to explain democratic deficit. The main argument here, why is this so? You can ask me, why is this so? The idea here is that if you have more Islamic constitutionalism in your constitution, then you have a declaration, more or less, of an Islamic state. And here I'm talking about Islamic state in general, not Islamic state like Daesh. But you are establishing more or less a state that's ruled by Islamic law. If you have a state like that, usually Islam gives a higher legitimacy for rulers, or in Arabic, wali al-amr. So this ruler, and usually he's a male, so the ruler have more powers and more abilities. The executive branch of government would have much more abilities than the legislative or judicial. And sometimes, even in some countries, it reaches sacred levels. So this higher powers of executive branch, it destroys the idea of checks and balances, and it creates a huge obstacle for democracy in any given society. So this is the main argument here. We're not saying that Islam per se is bad for democracy or whatever, but we have, it's more or less a political, we're talking here about political Islam. or Islam when it's morphed to be part of the constitution. We're not talking about Islam from, of course, spiritual or sacred perspective. Definitely, this is beyond the scope of economics by all means. So I will leave the next part to my co-author and wife, Shimaa Hanafy, to present the empirical part. Wish you all the best and hope you have an enjoyable evening. Thank you.
So moving on to our empirical model, our dependent variable for democracy is a dummy variable that takes 1 if executive and legislative offices are filled through contested elections and takes 0 otherwise. It is based on the famous data set by Shaiboub et al. From 2010, which was recently updated by Bernskov and Rode. Our main explanatory variables on Islamic constitutions, we take 2 variables as explained by Moamen, source and supremacy. Source is a dummy variable that takes 1 if the constitution identifies Islam as a source of legislation, and supremacy allows for more differentiation. It's a 3-point scale where we differentiate between 0, 1, and 2, and higher number is reflecting a higher level of supremacy of Islamic law. As a variable for natural resources, we take the total oil and gas rents per capita from the data set by Ross and Mahdavi from 2015. As control variables, we control for income per capita, for whether a country has a socialist regal origin, for the globalization level in a country, we're using the CUF globalization index, and also for the share of Muslim population in the country to differentiate between the formal institution and the informal institution here, as explained by Moamen. Our data sample consists of 3,827 observations, which are from 160 different countries and cover a period the period between 1990 and 2014. We cannot use a panel data model here because there is not enough variation over time in our main variables of interest, but what we do is we include year dummies, we include regional dummies for the 5 regions according to the World Bank classification, and we also cluster our standard errors at the country level. Here is the list with all the variables that you use and the data sources just for further reference. We don't have the time, of course, to go through it all. From our descriptive statistics that we describe thoroughly in our paper, I would like to just highlight a number here regarding our dependent variable on democracy. On the left-hand side here, we have our full sample. We have our full sample. And on the right-hand side, we have our treated sample. Treated sample means these are the countries and observations where Islamic law is a source of legislation. And we can see here it's 16 countries and it's making 321 observations. Now, let's look at our main variable of, at our dependent variable on democracy. We find here a very big contrast in number. So basically what we can see here is that democracy exists in 57% of our full sample observations, while in contrast to that, only 6% of the observations where Islamic law is a source of legislation in the constitution are democratic. Now, let's get to our results. So first, we just estimate an OLS model. And in our first column, we can see here that our variable on source, so Islam as a source of legislation, is having a negative effect on democracy, which is also highly significant. The 3 stars here, if we look at the bottom of the table, means actually significant at the 0.1%. significance level. So not just 1%, but even 0.1%. This is our 3 stars. 2 stars mean 1%, and 1 star here stands for 5%. So we're even more strict than usual. To interpret the number here, it basically means that countries with constitutions that mention Islam as a source of legislation, they have a lower probability of being democratic by 29.9 percentage points. So almost 30 percentage points lower probability of being democratic. In the second column, we additionally add the share of Muslims in a country as a variable. And in the third column, we additionally add, instead of the share of Muslim, just a dummy whether the Muslim population is a majority or not in the country. Why are we doing this? We're doing it to rule out the possibility that our previously estimated effect here on Islamic constitutions is just reflecting an effect of the Muslim population rather than the effect of Islamic law as a formal institution. But what we can see here, both variables, they are not significant, and we can also see that our main results remain robust. Now, in the columns 4 to 6, we basically repeat what we just had, but now instead of using the source variable, we use the supremacy variable. And we can see that our results are robust here. We can interpret this finding as if there is a 1 point increase in the supremacy of Islamic law, this goes in hand with the lower probability of the country to be democratic by about 17.4 percentage points. This also means that if supremacy is highest, which would be 2, then actually the effect would be the double of this, which means almost 35 percentage points lower. So source or supremacy give us similar results. Now, we need to talk about indigeneity here, because what if it's just the other way around? What if it's actually the lack of democracy that's leading to having Islamic constitutions and not the other way around? So to tackle the indigeneity concern here, we additionally use an instrumental variable approach, and we are inspired here by the big strand of, or well-established strand of literature that's using exogenous variables from geography or historical events to explain today's institutions, where based on lots of famous work by, for example, Asimoglu and others, and Nathan Nunn, and so on. So we rely on 2 instrumental variables here as exogenous predictors of the degree of Islamization of a country's legal system. And we follow here the approach previously taken in a paper of Moamen and Gutman that was just published last year in Public Choice, where they take, and we take here 2 instruments: distance of a country's capital from Mecca, and also a measure of Arab conquest based on the data set by Cheney. The idea here is that the instruments are relying on the hypothesis that countries that are geographically closer to Mecca and countries that are that have been under Muslim rule for long period of time, over centuries, they are more likely to have adapted Islamic constitutions that are still in effect today, like with the clauses that we are looking at. So what we're presenting here is our 2-stage least square results. We're presenting the second stage of the 2-stage least squares. And as we can see here, that our results with the source variable, with the supremacy variable, they are highly robust. Actually, what we can see is that the magnitude even increased very much. It almost doubled compared to our OLS results. And at the bottom of the table, oh no, not here, but in our paper at the bottom of the table, we're also reporting diagnostic tests on the IV validity, what we skip here just to fit our table on the slide. Then finally, and this is promised the last table we're showing, we also want to present our probate results. The thing is, our dependent variable of democracy is binary. It could be 0 or 1, which means OLS, as we know, could be problematic here because it could be predicting variables, values lower than 0 or higher than 1. So we additionally estimate a probate model here and report here our marginal effects. And as we can see, the effects are the results are very robust. Actually, we're finding very similar results in terms of magnitudes, similar to our OLS results. So our conclusion very briefly is that when entrenching Islamic law in constitutions, we find that it's significantly linked to democracy deficit in Muslim majority country. So the formal institution here, and it is different from what is suggested by previous literature about an informal institutional effect, that the effect goes through the Muslim population. We do not find any direct effect of Muslim population on democracy deficit here. So it is when there is political Islam leading to Islamic law being entrenched in constitutions, this has a negative effect on democracy in the countries. We also, other from previous literature, do not find a negative impact of natural resources on democracy. At least it's not robust. So sometimes there, but definitely not robust. Our results are also robust to alternative measures of democracy. They are robust to alternative measures of natural resource rents, and also to including additional control variables like education and equality and so on, and we report this in our paper. So thank you very much for your attention and for listening, and we're sorry that we cannot be live with you here today, and we're looking forward to receiving your comments. Thank you.
Thank you very much to this virtual presentation, and I'm very happy that we managed to overcome our technical challenges and have the presenters present their very interesting and, if I may say, a bit controversial point of view that counters the general notion that about the resource curse. So it's a very interesting and novel approach, and I hope that in the course of discussions we can dig deeper into that issue. I find that so far I have not received any questions and answers, but I hope that as we move ahead, you will be sending us your questions and answers so that we can make sure that we cover them. The entire session has 1 hour and a half. We have already used up 1 hour more or less for the presentations. It has been longer than we had anticipated, but I think both presentations, at least personally, I found very informative, and I think that we've made very good use of our time. I will try to keep my comments short in order to maximize the time for comments. And already I see 2 questions and answers, so I think we can look forward to a very rich debate. With that, let me start with my prepared comments, and I'll try to go through the comments very quickly to allow ourselves maximum time, as I said, for the presentation. As we all know, Socioeconomic developments in the Middle East region has been shaped by the intersection between oil resources and continuing democracy deficit, at least for the past 70 years. The economies of the region went through substantial changes in the 1950s and 60s, in line with the dominant import substitution strategy of the time. The political systems were also influenced by the importance of oil, which, even at low levels of per capita rent, was able to shield the ruling powers from dependence on taxation. The region was thus able to operate based on a social contract of exchanging political repression in exchange for economic benefits in the form of public sector employment and low taxation. There were a few attempts by nationalist governments in Iran and Iraq in the 1950s to use oil revenues for national development and diversification, more or less in line with what Amir is suggesting. And these were done in under both democratic and non-democratic forms. The Iranian case being a short-lived democracy, and the Iraqi one a totalitarian system. But both experiments proved short-lived due to military coups in both countries. The oil curse became much more entrenched following the dramatic increase in oil prices that we saw from 1973 onwards. The poor management of the huge windfall gains of 73 provided ammunition for the idea that poor governance in oil exporters doesn't allow for productive use of oil rents domestically. This was convenient for the powers that be, that we were not too favorable to economic diversification by oil exporters, which would have reduced their dependence on exports and made oil even a stronger political tool, which definitely would have been inconvenient for many powers. Now, over the years, what we have is that there has been a very nefarious alliance built up of anti-developmental forces at the national, regional, and global level, which have created the conditions that perpetuate the current misdirected use of economic resources in MENA. And this, for me, is the main reason why the eloquent arguments made for use of oil revenues to diversify MENA economies have not won the way. I mean, I fully agree with Amir's arguments, but the issue is that we have to see why is it that despite this, what I would call more or less a self-evident truth, we haven't seen use of these resources for structural transformation, which is a term I really like in Amir's discussions. Many people who have written on the issue of oil curse and diversification in oil-producing economies use IMF's measure of export diversification. I would draw the attention of participants to IMF's working paper number 105, entitled Understanding Export Diversification, Key Drivers and Policy Implications, which came out last year. What it finds is correlation between resource rents and extent of export diversification. However, there is a problem with the measure used to gauge diversification, because it gives the same weight to adding an extra agricultural product as it does to starting to export a manufactured product. As such, it does not provide a good measure of structural transformation of an economy, which is the main concern that Amir, for example, has been pushing, and again, something that I fully agree with. Therefore, this measure is of limited use beyond highlighting a high level of concentration in export products, which is problematic in itself, I would give you that. We should therefore look for a more nuanced measure to be able to analyze structural transformation, which is most likely the desired end state of a conscious policy of economic diversification. The submission, the presentation by Dr. Gouda and his wife that we just heard makes a very good attempt at debunking the general view held that there is a negative impact of natural resource rents on democracy in many countries. They use a sample of 160 countries with a subsample of 16. Unfortunately, I don't have the full list of the 16 countries, and I think it would be interesting to get some more detail of the study. But definitely the presentation is quite interesting in showing a fair degree of impact of the way Islam is reflected in constitutions and the presence or lack of democracy. To some extent, there is a logic behind it, which I can understand, is that to the extent that the constitution limits the margin for maneuver in legislation, it's definitely limiting choice. So it could lead to totalitarian action. Therefore, it makes sense. So now, and I like the point but one thing that is very interesting about their approach is that they differentiate between the cultural view of Islam and a legalistic view of Islam. And I think that's a very welcome innovation that they introduce. The main point that I like the presentation, I like the suggestion by Amir for taking a phased approach to use of oil rents for economic diversification, but I'm not sure if that is sufficient to answer the question of why is it that so far there hasn't been any attempt in moving towards that diversification. I find the use of Malaysia as a comparator a valid one, and I think we really need to study the Malaysian experience maybe more carefully. Norway and Canada, which are used as comparators in the paper by Siham Matallah that we didn't get presented today, I think are a bit more problematic as an example because of the fact that they reflect a very different level of development before oil came into these countries. The paper by Siham, which you can read, has an interesting feature in the way that it talks about mutual interdependence between oil rents and good governance. It shows that the positive impact of good governance on the diversification, on the quality of education. There's definitely an inherent link between public accountability and good education, which causes non-accountable governments to promote low quality education. I really like the separation between different groups of countries and then the choices that they have. That is there in Amir's presentation, and I want to commend him for that innovation that he's introduced, as well as commending the other presentation for bringing the innovation of looking at the way Islam is reflected in constitutions. With that, I close my comments and look forward to going through the questions that we may have from the floor. I can see already there are 2 questions. I'll read the first question on Islam and formal institutions. Thank you for the very interesting and meaningful presentation. Scholars in Middle East women's studies have long pointed to Muslim family law as inhibiting gender equality. In my own work, I find that MFL is an institutional obstacle, both formal and informal, for women's labor force participation. So that's a very interesting comment. Unfortunately, we do not have the authors of that paper with us to respond. The other one is, what about the estimation results of the treated sample? Again, unfortunately, the presenters are not here, but I'm sure that we'll be able to get the answers later on. If there are any, let me see, I also have some questions in the chat. Yes, we'll definitely share these questions with Moamen and get a response by email to the group. But since I see there are two other questions and the question and answer. No, I think these I've already seen. If there is anybody who wants to raise a question in person, please raise your hand and I will unmute you so that you can continue. We have 23 participants. How come? Were the presentations so clear that there are no questions by anyone?
Mohamed, can I jump in to answer some of your own questions and comments?
Yes, please, Amir. You come.
Thanks. Thank you very much for the comments. These are very useful. And yeah, we've discussed the issue, right, of the politics. So why is it that these countries have not made more efforts to diversify their economies? So there are two things that I want to bring up. So this aspect and the issue of measurement with the IMF Diversification Index. And I agree with you. And I would even add that, I mean, this index, but also the HHI, the Herfindahl-Hirschman Index, one of the issues is that they treat different products, right, separately. So even products that are actually related. So if you produce crude oil and all of a sudden you start to refine some of that oil, you will treat it as a diversification, right, to a new product and not really realize that you're still actually commodity dependent, which is why in some of the figures I actually used an indication of the share of extractives in total exports. So that means that whether you export crude oil or refined oil, that still counts as, you know, commodity dependence. And another issue, actually, so you discussed the issue, the problem of export sophistication, right? So you're right. This could be this could show the level of sophistication of an economy, but I also have big problems with this type of index, mostly because it only looks at the product, but not the production process behind. So actually, if you diversify, let's say, towards fishing or salmon, right, it might treat salmon as less sophisticated, let's say, than a computer. But if you look at the experience, for example, of Chile or Malaysia, in Chile, salmon farming is actually technologically intensive, right? They have all the industry around it to provide vaccines, R&D, and all the rest, right? You know, and also cold storage systems, you know, to transport fresh salmon across the world. And I mean, in countries like the Philippines, for example, right, they produce electronics, but with very little value added. Most of it is imported, assembled, and exported. So it actually may distort the idea of of export sophistication, right? And regarding the politics, you're absolutely right? The question is why they haven't. And actually, as you also pointed out, there are some countries that did attempt, right, to, especially Algeria and Iran and perhaps Iraq, to construct developmental states, but their attempts failed. And some of it may have to do with, you know, perhaps poor policy design from the beginning, particularly in Algeria, right, where issues of export orientation were trumped But some of it also has to do with long-term vision. And Malaysia, that you mentioned, a country that has had a relatively successful diversification, something that is really worth to mention is the long-term vision. So diversification policy did not happen in a vacuum, right? But they were anchored in 5-year plans, continuous 5-year plans, which was also aided by political continuity, right? The same party that was in place. So even if the prime minister changed, the plan was, so there was a 30-year vision. Those things were actually quite serious. So not just objectives for 5 years, but actually different types of stakeholders had to give their opinions. And once it was adopted, it was very hard to stop that machine. So yeah, so interesting dimension in terms of the politics to further research. Thanks.
Thank you very much, Amir. And I also have a question or comment here from Hassan Hakimian about the paper by Dr. Gouda, and it's something that it's a concern I also share is we really need to question the notion of democracy itself, because many times we define democracy in a formal sense and lose the essence of it, so that there can be the mechanics of an election, the results are foretold. So we have to be very careful in what measure we use for democracy. But that was a very good point by Hassan. Thank you very much. Any other questions?
There's a comment by Dr. Hassan Hakimian that's been added to the Q&A.
Yes, I saw that I read the comment. It's about the notion of democracy itself, that the definition given was rather limited. I read that comment.
We'd be happy to convey those the 2 questions and a comment to the authors and see if they can get back to us to share with the group.
I think that would be very well appreciated, because that paper does discuss a very interesting issue, and I think there'll also be some discussion around the whole question of the extent to which constitutions matter, because we unfortunately also see lots of constitutions that have all the buzzwords, but in effect they are emasculated. So I think another question that I would want to pose to the writer, to the authors, is the extent to which we should actually take constitutions seriously, because you would hardly find any constitution that would openly talk about a totalitarian system. Even in the Soviet system, it was talking about the people's democracy. So we have to be very careful in how we refer to constitutions. Shireen, I think maybe we can close the meeting by thanking Amir and also Dr. Gouda and his wife for the presentations, and thank all the participants. It's unfortunate that we're not able to get the replies from our presenters who presented a very innovative paper on the relationship between the presence of Islam in a constitution and the presence or lack of democracy in a country. That's a discussion that I think will continue, but otherwise the whole notion of democracy deficit, the role of political Islam, and the role of natural resource strengths are current questions in the Middle East, and unfortunately they will remain current for the time being. With that, unless Shireen, you have anything to add?
I just want to add a thanks to you for being so flexible and accommodating with all the last minute changes. I hope all is well with Siham. We'll continue to make sure things are good with her. And I'm really glad that Moamen managed, and his co-author and wife managed to give us a good presentation of their paper. And I thank Amir for being here in person, and the recording will be made available following the session, hopefully shortly. And we'll convey the questions to Moamen and get back to the list of participants. I thank them for their presence. And Gouda will be also communicating with the authors shortly to follow up on the production as part of the ERF working paper series. Very, very special thanks to all.